And welcome to another edition of Building Returns with Source My Property. My name is John Stokoe, as you should well know, and myself and my business partner Roger Burrows started Source My Property, and we are a property development and sourcing firm in the south of Wales and across the south of England. This show is hosted by W.O.R.K.S, and my role and my job with Building Returns is to showcase all the people around the world in property world that are the movers and shakers, people that are doing great things out there in the industry, people who you, the viewers, need to know about. If you're going to be doing transactions within the UK, a person that you definitely need to know about is Dominque Barker. She is my personal broker, and having been in the property industry for 17 years and been through more than 17 brokers in my time, anybody that knows when you find a good broker, you've got to hang on to them tight. So it's my great pleasure to welcome Dominque Barker of Sprite. Evening, Dominque.
Hey, John. You all right?
Yeah, very good, thanks. Dominque, before we get into the whole business side of things, and the whole property side of things, can you give me a brief background on yourself and what led you up to being into the role and the business that you're involved in now?
Yeah, so, before I became an advisor, I was actually in man management for about 10 years or so, and decided to have a career change. And yeah, that's when I decided to get into property, always been interested in property. And so, yeah, took my qualifications back in 2013 and haven't looked back since. So,
okay.
Yeah.
Can you give people just a general overview on yourself and Sprite and the business that you're involved in?
Yeah, so I currently work with Sprite. We're an appointed representative of W.O.R.K.S, which is our network, and we work with over 50 lenders on panel and have master brokers that we deal with to get into like second charge arena and doing development finance, that sort of thing. Me as an advisor, I generally specialise in buy-to-let mortgages. So I'd say, if I dare put a figure to it, it's probably about 80% of my clients are buy-to-let investors. So I manage portfolios predominantly. The rest is residential and split between commercial as well. Yes, that's pretty much me. Obviously I do deal with not just sorting out the mortgages for my clients and seeing that grow, but also the protection side of it. So we want to protect what you're doing for the long term. So yeah.
Okay, so anything that involves some bricks and mortar within the United Kingdom, you are a go-to person. You can help people out, obviously subject to their financial capabilities. You're able to help people out. Is that right?
Correct. Yeah, correct.
Okay. And I'm glad you are heavily weighted on the investment arena, because that's obviously the name of the show. The residential side, I think there's a small portion of people that watch the show for that, but mainly everybody that's involved here is involved is wanting to understand from an investment perspective. And we do go out globally. We've been in the States, we've been in Australia, we go to South Africa, we've been in Switzerland. Wales, of course, also across the border, where I am right now. And if the eagle-eyed people might spot a Welsh flag behind me on that side, I think. Anyway, so everybody knows that my business, or our business, Roger's and mine business, is in the investment field. And we help people for our own portfolios, and we build other people's portfolios from the entry-level buy-to-lets. And then we get into the heavier side of things on the commercial side, as well. Now, could you just explain to the viewers briefly what the differentiation is between a buy-to-let mortgage and a commercial mortgage or commercial lending?
So obviously a buy-to-let mortgage is based on you buying a property to rent out. Obviously we're doing very basic terms here, but buy-to-let could cover many forms. It could be a standard rental agreement to a HMO. That covers generally from the board, one end of the spectrum to another, even to corporate lets often fall under buy-to-let investment. If you're going down the commercial end, then that can broadly run under what we call true commercial, semi-commercial, which would consist of, a shop, say, underneath with a flat above, or it could be you're buying a physical business and taking that on with the property around it, which is what would fall under commercial. Also, commercial finance can still fall under what we could call a rental agreement. So it might be we have a client that's buying, say, a big block in London that's being rented out. They own the whole block. And actually, because of the sheer size of the finance, we would actually look towards maybe going towards a commercial lender for that, not a standard high street lender.
Okay. And then for a lot of people that are involved in the investment arena, whether it be small, medium or large, a large part of the additional funding would come from the development finance. Do you help people with that?
Development finance?
Yes.
Yeah. So absolutely. So we get, again, that can be from lots of different spectrums. A client could be looking to purchase just a small house, could be, run down, wants to, do some refurbishments, but it's not going to pass as a buy-to-let mortgage lettable on day one. So they still obviously want to buy it. They don't have the full cash to purchase it outright. So we've looked to do some sort of bridging finance on that. And then, you've got obviously the true development, which would be you're purchasing, could be, a plot of land that you've got permission, to build on, and you need help to fund that project. So we would look for development finance on that to run through the whole project, and then we would also look to take that out, depending on the client, whether they're looking to sell the security or retain it as an investment.
Okay. Now, obviously, and I know with my knowledge, and you know far better than I do, the different permutations are extreme and way in excess of the 30 to 40 minutes we have time for.
I appreciate that.
If we categorize it by extremely broad terms, generically from a buy-to-let investment, obviously different firms have different criteria, and I'm not going to ask you about interest rates, but generically, can you give us an example of a buy-to-let investment and what a buyer or investor would need to be able to get into that, and what the sort of general parameters would be for them to then qualify for that mortgage?
Okay, so if I've understood you correctly, John, so you want to, how would somebody be stepping into the buy-to-let market? I mean, generally speaking, as you said right at the beginning, it's very difficult to box this, but I'll try and answer it as best as I can. If a client is looking to get into the buy-to-let market, we generally want to see that they've got a stable income. Most lenders will have a minimum income requirement. A lot of people ask, why is that? Because, we want to know that if you're going to be able to manage any potential rental voids, manage the management generally of the property, the upkeep of it. So, a lot of lenders do have a minimum income requirement. Not every lender. So this is why it's quite difficult for me to say, well, this is what the requirements are. It's really so. But we would want to see that. Obviously, we want to know that you're managing your current finance as well. So we want a clear, history there. And also the asset that you're buying. Far too much, speak to people and they're trying to, I would say, try to run before they can walk, So if you're just stepping into the market, really do your research, get that experience under your belt, buy something that's, that's not a really complex HMO or, something like that. I would advise to start off small, really get to know your market and standard sort of AST agreement out there. Because again, depending on the security that you're buying could impact on the type of mortgage that we're looking at. Okay.
And what sort of level deposit or loan to value would you be looking for generically?
Yeah, generically, an average in the market is 25% buy to let.
Okay, so if I sum all of that up and tell me if I'm stepping out of line here.
That's okay.
if we generically, and obviously we got to put the caveat on to everybody who's listening, everybody's financial situation is completely different. I'm not the broker. Dominque, she'd be able to help you through all of this. But generically, if you had, say, £100,000 property, you'd be looking for the investor to obviously be creditworthy, to be in a job. They don't have to be earning millions and millions and millions. They have to be in a job. If they're starting out, to start off small and don't try and bite off more than they can chew, more than they can chew. And £100,000 property is probably in that sort of realm. Obviously, the more experience we get, then we start talking about, which we will talk about shortly, about the more deeper involved products that are available for more extremes, when we start working into the millions. So approximately 25% deposit to get in, plus your purchase costs with lawyers, etc. Maybe broker charge. Obviously, you're not in business to be free. And then the property itself would need to self-substantiate itself. So the rental would need to cover the mortgage by, 125, 130%?
Yes, good question. So there's been a lot of change in that recently. I don't know for the viewers that are listening are aware, I'm sure you are, but there's been massive tax changes in the market this year. We're actually in year one of those tax changes over the next 4 years. So the backlash of that is that the rental assessments, which is what you're talking about, have actually changed and are in line with the client's tax band. So yes, there is what we call a notional calculation that's gone up. If I'm on the phone to a client, or speaking as we are now, you say, Dominque, I'm looking at a property, it's generating 800, or £1,000 a month. If I'm on the phone, not on my computer, I'd go, right, a quick notional calculation is 145% at 5.5, actually. So it's gone up drastically. Last year, we'd be talking 125%. So as a quick rule of thumb, I'd be going, right, that's going to support as a notional rate this mortgage. Is that what you're looking for? No, actually, we need more. So, and it's not to say that there's lenders that reduce that calculation. There are still lenders that will deal 125 and or higher. So I will obviously
industry. You call it sort of industry average at the moment now. And I suppose those lower rates, there's going to be other risk parameters from the lender's perspective, potentially looking at your income, substantiated by income or other assets and that sort of stuff. So there's the risk element that plays in there. Okay, now that's good. Now, and as I mentioned, the different parameters and the different permutations are far too lengthy to go into. So if anybody's listening, as I said, that's a generic term of approximately 25% deposit in, creditworthy, got a job, and 145% of your rental amount's got to be covered. Okay, at 6%, stress tested at 6%, which is very strong. Which is very strong, which is good to know. So that's just the entry level. Let's take a step up from there. Somebody looking at buying a let's just say a larger development or a plot of land, and now we want to build some houses on it or do a massive extension or something like that. Can you give us an idea of how one, again, Dominque, generically would finance and what they would be looking for there?
Yeah, so when it comes to development, we're looking for experience, and that's hard, right? Because it's a catch-22. And I'm just stepping into it. How do I show you experience? So that's not to say that we can't find finance if you are just stepping into this. But say it's too much of a broad spectrum for the show. But mainly when it comes to development, it's the lenders are looking for experience. They want to know what you're doing. Have you done it before, or is this a slight step up to what you're doing? Have you done all your homework? Is planning permission in place? Where's the schedule of works? Is the gross development value realistic? What architects are you working with? What builders are you working with? Are they, respectable companies? Have they got track records? Can we leverage on that? So those are the questions that will be asked. Do you know month by month what this development is costing you? Do you know month by month what stage, the build that you're going to be at? have you got contingency? Contingency is a massive thing. You know, clients will come and say, well, yeah, this project's going to cost, you know, 400 whatever thousand, just plucking number out of the air now. Right, okay, well, what's your contingency? You know, you've got to at least minimum have 10% contingency, because, you know, as you know, John, nothing ever goes to plan when it comes to builds. There's always something that will...
We all know, I don't think there's a developer out there or a buy-to-let investor that hasn't stumbled across something. I'm trying to think back of all the properties I bought, if there was ever any one property that went 100% smoothly from putting the offer in all the way through. So I clearly understand that. And I suppose your answer is coming back to what I was talking about earlier, was just the level of risk from the lender's perspective. If they're forking out hundreds of, if not hundreds of thousands of pounds, they've got to know that their money is secure. So it's just their risk, and their risk, you are part of the risk. So your track record, your knowledge, and how you structure that deal is a massive part of whether or not you will or won't get that finance. And
absolutely, it's an important thing with development, because, you know, we literally, like you've just said, we literally will profile you to a lender as a client. We'll say it's like a CV. I always call it a CV, a property CV, because it is that risk that ultimately a lender could be left with a security that's half built or not built at all. You know, and obviously my job is here as an intermediary to act for a client. I'm also acting for a lender, but yeah, you're absolutely right.
Somebody's asking a question, keeps on popping up on the screen here. They've asked a number of times.
I can't see questions coming up. Sorry.
But what percentage of all mortgage applications are successful? So for me, I think that's generic across the board. But I mean, if we're talking I think we can only aim that at yourself really for now. So what would you say? What percentage of applications are successful?
For me personally, I mean, I can't talk for the industry. You know, we, as an advisor, we do have KPI triggers for that, because if an advisor is chucking lots of business at a lender and it's not completing, then I'm clearly not doing my job properly. So it's in a financial services industry, that actually is a trigger from a compliance point of view. So yeah, I mean, I can't talk, as I say, I can't talk for the whole industry, but I would, I mean, over the last, over the last 6 months, I've probably had 2 or 3 cases that have not ended up going through.
What's that as a percentage of your overall work then?
I mean, last year, because obviously it's the new year, so I know exactly how many cases I completed on last year. I did 89 cases that completed last year. So that's not a lot, really. That's not a lot. You know,
that's a very small percentage. But you'd obviously be able to filter that out right on the initial discussion. I see another question that's just popped up. There was how long with a buyer solicitor or something like that. I think how long it takes for the buyer solicitors to be in funds and complete. That's a difficult question. I'll answer that one. That all comes down to the buyer solicitors and whatever's in the deal. I've seen deals go through within 28 days. I've seen them go through within 3 weeks when forced. I've seen other solicitors take up to 6-9 months to complete on a specific property. It all comes down to the property. It all comes down to the solicitor that you're dealing with. And there's solicitors on both sides. It comes down to the finances. It comes down to the lenders themselves. So to give a hard and fast answer on that is impossible. But I've seen it anywhere from, Dominique, you can back me up, anywhere from 3 weeks, 3 to 9 months. I'd say industry average 2-3 months. Would you say, Dominique?
The average life cycle for a mortgage to go through is 3 months. Yeah, that's the average.
But there's so many moving parts in that you can't sort of tie it down as to what it is specifically that's going through. I mean, some people sometimes want to drag out the purchase for their own personal reasons, or solicitors might find something, or there might be a discrepancy, or you might find something in the searches that need to go through. So there's various different reasons. But to answer the viewer's question, about 3 months is about generically what it takes. Okay, so we've covered generically what you do, Dominique. I suppose the question somebody else is going to ask is, how do we get hold of you? How do we get hold of Money Sprite? What's your URL and how do we find you?
Yeah, so it's just moneysprite.com, nice and simple. You will actually see the whole company there, see, our office addresses. I'm based out of the London office, which is where I am right now. And I work, remotely. So, as you know, John, a lot of people call me by my mobile. Via mobile. I'm on LinkedIn. You can just Google Dominque Barker, and I think I'm the first person that comes up on the Google search now. So, email,
And just covering that point, and also just to go back to an earlier question, what percentage of deals go through? This is something that I'll mention for the viewers on your behalf.
Yeah.
And also something I mentioned earlier is why I deal with Dominque is because Dominque will do whatever it takes to make that deal or opportunity happen. She knows and I know that I push the envelope as hard as I can to push the business through as much as I can. And I know when I'm getting a little bit cheeky, but Dominque is always within the rules, but is doing whatever I can and finding out whatever options and solutions there are out there in the market. My next question is about what makes you unique. And I'll tell you from my point of view what I feel makes you unique. Number one, you're the hardest working person out there. But probably the most important thing is that you have access to the entire market and the entire spectrum of available products and mortgages that are available. Not all brokers do, and that's not to put them down. They have their own specific niches, but that's one of the main reasons I come to you is because I don't believe that I am standard. I like to challenge. I always like to push the envelope. You and I have a great relationship because of that, but we find the solutions. We're always looking for the solutions. So that's my answer to the question I'm about to ask you. But The question is, what makes you and your business unique? Why should we be coming to you?
Yeah, well, thanks, first of all, John, for such kind words. Thank you. First of all, let's just go back a step. What you're saying about, the company, saying about, whole of market. So, let's just clarify that. I work with W.O.R.K.S, which is part of our network. Actually, brokers that I don't believe are actually allowed to say they work for whole of market anymore because there's.
That's what I said.
Yeah. So there's lots of little banks, building societies that might be stuck out, somewhere north or whatever, private banks that we might not have heard of. So I'm pretty sure we're not allowed to say whole of market anymore. But to clarify my position, we work with W.O.R.K.S, which is over 50 lenders on our panel. We've then got as I said before, our master broker, which deals with more complex cases, which leads into our second stream lenders. So, we've got all the main high street lenders on panel plus more. So pretty much, like you say, whole of market. But what makes me unique? It's hard for me to say because it's my perception, but, ultimately my clients speak for me, which is really kind. But I do work hard. I work extremely hard. I like to consider that I do. I'm accessible. I'm not stuck at a desk 9 to 5. I work with a great company with Money Sprite. I've got complete autonomy to get on and do what I'm good at, which is give advice. I can, as you know, John, sometimes I can speak to clients at 10, 11 o'clock at night. Sunday, I've booked just now another appointment with a client on Sunday evening, and that's fine. That suits me. That suits my client, and it works. It's
8:30 at night now in the UK on a Thursday night, and you still in the office?
Yeah, I'm here. I am. So, some brokers, and I'm not slating anybody. I'm not saying that I'm perfect or I work with everybody because I don't. But it doesn't work for me being stuck at a desk 9 to 5. I like to be accessible. I like to be able to get to clients. If they want me to come to their office, I will come to their office. If they want me to come to their home, I will come to their home. To have that flexibility and that autonomy works. So that's just that side of it. Also, I like to think that I give good advice. I give sound, solid advice. I'm not here just to do one transaction with you. I'm really not. So, which leads back to the question earlier, how many deals go through? I really get to know lenders' criteria. I like to think before I put an application in, I know whether that case is going to go through or not, to the best of my knowledge. That sets me apart. And if I don't know something, I will be sure to go and find it out. I'm not going to tell you that I know something when I don't. And that gains respect,
Sure. I couldn't agree more.
Yeah.
That's why you and I have that great relationship. There's that open and honest and frank discussions that we have. You know, if I ask for something and it's not going to happen, then it's no. And that builds respect. I'll ask questions. I don't know. You're the professional, and you'll come back to me and tell me we can, we cannot, and this is how, or this is how we can, or what you need to do to be able to do those sort of things. So from that point of view, obviously referral business and return business is part and parcel of what you do. So how important is branding or being visible out in the market to you, or do you survive enough on the referral and repeat business that you get?
Going to be honest with you, John, I survive on my client bank and repeat business and referrals. I mean, just for the viewers, I've been in the industry now for 5.5 years, and I've currently been with Money Sprite since July 2016. So before that, I was with a different company. So I've only been here for 18 months, and the reason I changed over was because of what I explained earlier. Money Sprite is great in the fact that gives you great autonomy for me to work how I want to work, and just get on with what I need to do. Would you say from a higher level, because you're with Money Sprite, your role is not specifically to worry about the branding and being out in the market, and that there is an overall Money Sprite owner of that image overall that portrays that and puts that out in the market? Yeah, I mean, Money Sprite as a company is great. We've got a great reputation of, solid, sound advisors. We all, sing from the same sheet, but I don't, like you're asking about branding, I don't rely on saying I work for Money Sprite. Do you know what I mean? So I don't rely on that.
Ladies and gentlemen, she's good enough. She doesn't need it. But she's willing to take on more business, and that's why we are here. Dominique, you're saying with all the business and the long hours that you work, how do you balance the old work-life balance? How do you keep that in check? I know you've got a young daughter. How do you provide her with time, at the same time give clients the outstanding services that you do?
Yeah, so, I'm all for having a balanced life. And sometimes that is actually what brings me and my clients together, because actually we're all striving for the same thing. They speak to me, they're in their day job, and they actually want to start investing into property and get that balance back in their life. They don't want to be working 60 hours a week. So they're trying to replace some of their income. So actually we're all in the same direction, I'm just sitting on the other side of the fence as such, on the property side of it. So that's why half the reason why I joined Money Sprite, to have that balance. As you know, John, I sometimes speak to my clients when I'm on the school run at 9 o'clock, and I pick Darcy up, my daughter, from school most days, and I just manage it. I get up sometimes early in the morning, at 6 o'clock in the morning, and I might be tapping away at my laptop. Clients will get emails from me early in the morning. I might even be on the phone sometimes. Then I'll have, an hour where I'm with my daughter, getting her ready for school. Then I come back, just hammering away at the work in between. But I do sometimes balance it out in the fact that I will say, do you know what, I'm going to the gym. So I will take that because it's needed, so I'll go to the gym for an hour. I'll come back. I don't beat myself up about that. Because I know that I'll be logging back on to work at 7:30 at night, and sometimes working until 11 o'clock. But I do make sure I have that balance, because that's the whole reason why, I'm where I am today, to enjoy life, to see my daughter grow up. And that means sometimes I can say I'm having tomorrow off for Friday, or I'm working Sunday. And that's the flexibility.
So really, by working hard and delivering and giving the results that your clients need, enables you the time that you specifically need to spend with your daughter Darcy. So people out there that are listening in, not only a successful businesswoman, but also a successful mum as well. And that again sets you out as unique. A lot of people that I know spend as much time that you do suffer when it comes to family time. And I know personally, again, I know that as a fact, you balance that out really, really well. So that's pretty much where you've come from, what you're doing right now, your work-life balance. Here's I always term it as the old HR question. What's the vision? Where do you see yourself going? What's the 3 to 5 year plan? Where do you see yourself then?
3 to 5 years. I'm progressing my qualifications. So I'm doing my diploma this year. I'd like to think in 3 to 5 years, I would have pushed up to even further in that. So educationally wise, just keep that going. I think it's always good to keep the brain going. I don't see myself stopping this at all. I absolutely love my job. I absolutely love it. Don't get me wrong. Does it stress me out at times? I think, every job does, but I really enjoy what I do. So I don't see myself not doing this. Do I see myself perhaps, lessening it a little bit, maybe again going back to the balance of life, maybe tapping into something else? I do like looking into startup companies and things like that. So maybe dabble into more of that. I don't know, but just keep going, keep progressing, keep enjoying, balance of life.
The good thing is I know is that you're pretty much enabling people's dreams. I mean, people are coming to you with their dreams and lifestyle dreams, and you're enabling that. All right, and just looking at time, and also funny enough, my battery light is flashing at me. So my next question was about network, would have been about your network. But again, you don't really need that. I think as you mentioned, you're relying very competently on your current network of successful clients and referrals off the back of that. I think, Dominque, I'm going to say it again. Hold on. If this cuts off, I'm really going to apologize to everybody. I've got a few minutes left here. But in terms of the other side, in terms of gratitude, what are you doing from a charitable perspective? What are you doing outside of that to be able to give back to everybody else?
Every year I always try to do something for charity. So last year I did a Tough Mudder event. I don't know if anybody's heard of that, but, and I did that via the Cares for Kids, which is a charitable event via Open Work, our network. So we raised just over £1,000 last year for that. I'm not quite sure what's going to be on the radar for this year. I'm definitely not doing Tough Mudder again because I've done it twice now. And it's brutal. It's absolutely brutal. But always trying to do something every year to raise some money for charity. Yeah.
The successful businesswoman loves what she does, great mother, and somebody who's giving back to the world and the community. Everybody that's listening out, this is the main reason why I wanted Dominque on the show. She's the all-round package. If you need the best broker in the land, you need to be speaking to Dominque. She is honestly that good. I really, really appreciate your time, and you've grown to be a friend and a respected friend and business partner as well. So from my point of view, it's been an honor to have you on the show. Thank you very much for being here. I hope you enjoyed it.
Thank you.
To everybody else out there in property land, we'll catch up again next week. We'll have another exciting guest on for you, but I wish you all the very best and continue building your returns. Have a great evening, everybody. Cheerio. Bye-bye.
Take care.
Bye.